Private banking, as we speak in September, how it's evolving is very interesting. Let's look at the global private wealth scene. How is the wealth expected to pick up in the future? How is the cross-border centers expect to shape up? How are the private banking clients' composition? How does the private banking access to customers improvement? In global terms, instead of shrinking, global wealth financial soared, rising 8.3% over the course of 2020. That's interesting, isn't it? To reach an all-time high of 250 trillion. How much? 250 trillion. Behind the boom was a spike in net new savings and strong stock market performance fueled by highly supportive central banks. Cash and deposits grew by almost 10.6% over the previous year's numbers, making the largest annual increase in 20 years. Market shrugged off early jitters and many indices, I should say, and equities to record high by the year end. So it's interesting. You have seen of late so much wealth is chasing the stock or equity market because the financial stability is now coming. So when it comes to volatility, people want to have short-term focus. Flush with cash and encouraged by the prospects of robust returns, individuals directed more wealth into equities and investment funds and away from lower yielding debt securities and continuing old trends. Many also embraced alternative investments such as private equity, private debt and real estate in quest for even higher yields. Now, let's look at next 5 years, maybe stronger still. We see signs of emerging economic recovery that could significantly expand prosperity and wealth between now and 2025. This growth will create extraordinary opportunities for wealth managers, but it will require them to look at the market through a new set of lenses. You need to have a differentiated vision, bigger opportunity coming up in the wealth management. Now, how the wealth is expected to pick up in future. Of the 65 trillion global wealth that we expect to see generated over the period, 25 trillion will come from North America. If you look at the balance from Asia, 22 trillion and 10 trillion from Western Europe. Look at the affluence, how it gets dispersed. Now, the remaining of the regions in the world will have only a marginal impact on new wealth generation, especially when viewed individually. Today, Asia has low levels of penetration. North America dominates even today. With wealth management, the regions have generated 150 billion in revenues in 2020. Last year alone, nearly 2/3 of the global 235 billion came from North America. Western Europe remains firmly entrenched in the second place, that is 43 billion in revenues, that is 18% I should say, and Asia comes in the distant third at 28 billion, that is 12%. So significant portion is North America. Wealth management and asset management, what we call it as AUM, will expand a compound annual growth rate of 11.6% from now until 2025, nearly 12%, outpacing the growth investable onshore wealth of high net worth. Now, if you look at how the cross-border centers expects to shape up, Switzerland was the largest cross-border booking center in 2020, but we expect Hong Kong to take a lead in 2023 by overall size, with the strong inflows from mainland China and driving assets under management to a staggering 3.2 trillion by 2025. Wow. It's going to be huge. A compounded aggregate growth rate of nearly 8.5%. Over the next 5 years, Singapore will remain the third largest booking center in size and fast growing in overall, with assets under management anticipated to climb by credit aggregate growth rate of 9.1%. That is almost significant in global terms, and reached nearly 1.9 trillion by 2025. That's huge. Some of this surge will come from investors who bypass Hong Kong out of concern for political and social instability, as well as from rapidly rising sources markets such as Taiwan. Taiwan is also picking up well. The US will see a cross-border asset under management grow at nearly a compounded aggregate growth rate again of nearly 7%, I should say 6.9% to be precise, during this period, reaching 1.3 trillion by 2025. Latin America will rise I should say in terms of growth, if you look at it, at 72%, propelled by the individuals seeking state-of-the-art investing capabilities and investors-friendly environment. An additional 18% of the US cross-border wealth growth is likely to come from Asia. Now, if you look at the private banking clients composition, who the clients are, and if you analyze what they need, nearly 30 to 50% of the clients have little wealth invested. They are eager, but they have not done. They are sure cash keepers. They want to keep security, and they believe in cash. Nearly 20 to 40% of the clients have some wealth invested. Now, if you look at the big picture, it's nominal. 70%, if you look at incomes, if you look at the age, 51 to 70 years as on date, 20% is generation X, you can say. Then millennials, 10% less than 35 years. That's what its reality is all about. Nearly 10 to 30% of the clients have much wealth invested. So do it yourself. That's very important. And you have to necessarily make sure you're loyal, dedicated. You need substance to make sure that we don't overdo or underdo. Now, if you look at the access to customers, has it improved? Democratizing access to private banking, that's very important. Initial view of the next generation mass market products, not exhaustive. Customized discretionary mandate, alternate investments. Now ESG is becoming a bigger opportunity. Lending in the investment context, that's equally important. Pre-IPO shares, a bigger opportunity. So these four methodologies will help. Pre-IPOs, before it goes to the public, before anyone comes to know you invest. Lending in the investment context. Alternative investments is important. Customized discretionary mandate. These are the ways in which the wealth management is transitioning now. A huge transformation and big money making is in the offing in the coming days. In the next 4 years, you will see a lot of opportunities to make any asset class which you anticipate, as long as you focus and understand the changing market dynamics.